People keep making these mistakes when they're investing in cryptocurrency, and it's costing them tens, if not hundreds of thousands of dollars. Now make sure you watch to the end, and I'm going to give you some tips that'll show you exactly how to avoid these mistakes. The first crypto investing mistake that I see people make is that they can't handle their emotions. This is perhaps the #1 killer of investment returns. I know exactly what this is like. When I first started investing back in 2017, I got in right before the bull run, before prices started to pump. And when it started to pump, it was exciting. For the very first time, I was making serious money. Me and my girlfriend were away on Christmas holidays, and we're staying in a motel, and all we were doing was just checking our app 24/7 to see how high our portfolio value was going. And when the time came that I should have been taking some profits off the table because we'd had such a massive pump, greed got the better of me, and I just kept thinking, what if it keeps going? What if I take them profits too soon? So what did I do instead? I dumped more money into the market. What ended up happening was that the market started to tank quickly. And at the start of 2008, I was sitting there and I was just hoping that it would go back to where it had been at those highs. And I was telling myself if it had just got back to where it was before, I wouldn't make those same mistakes as before and I'd take that profit. But the market continued to decline, and after a while, fear got a hold of me and I ended up panic selling for a loss. And without realizing at the time, all I'd done was bought high and sold low. Now that's the opposite of what a successful crypto investor should be doing. And it was all because the two main emotions, fear and greed, were what was making my investment decisions. This eventually led me to learn that developing the right mindset and being able to handle your emotions in times like that is way more important than focusing on the latest or greatest investment fad or the hottest coin that you can invest in. And the crypto market has been the best performing asset class over the last decade, yet very little people have actually had any real long-term success in it. And I purely think that that just comes down to them not being able to handle their emotions. But let me know in the comments below, has there been a time when you've let your emotions get the best of you, and what do you do to stop it? And that leads me on to the second mistake that crypto investors make, and that's that they attempt to time the market. Now it would be nice if we could accurately predict when the crypto market has bottomed out at its lowest price and buy it, and then also predict when price pumps right up to its highest point that it'll reach and then sell it out for a profit and just repeat that cycle until we're rich. But this is extremely hard, and even large hedge funds that have millions of dollars that they throw at research every year, they still can't do this consistently, because in reality no one can predict which way the market's going to go in the short term. Crypto market prices are completely unpredictable, and if you haven't yet mastered your emotions like we spoke about before, and then you also try and time the market, you're just going to be in an emotional roller coaster like I was when I first started. You will constantly be bouncing from fear and greed, worrying if prices have fallen low enough that you're comfortable to buy, and if they've pumped high enough that you're happy to sell. Another thing is that while individual fees are low, over the long term, these fees will add up and can make a massive difference in your investment returns. There's an old saying that time in the market beats timing the market. This is when investors understand that their timing might be off, but they know that over the long term, the fundamentals matter more than the timing. And we know that in the crypto market, the average yearly returns have been massive, in the hundreds of percent. And it's crazy that people risk these returns just because they want to try and time the market. This is usually because of the third mistake that crypto investors make, and that's that they just don't think long term. But I watch so many people that just end up giving up ever getting rich at all because it doesn't happen overnight. They hear about people making millions off meme coins or doing 100x on some crypto project, but then when that doesn't happen for them straight away, they get discouraged and they just quit. Well, sometimes people can enter the market when the timing is just not ideal. And while they're buying, prices just declining. And if they aren't thinking enough long term, chances are they won't even make it to the next bull run and see prices skyrocket. I was fortunate enough when I first started investing in crypto back in 2017. It was just before the big bull run at the end of the year. And even though I failed to take any profits and watched my account dwindle all the way back down, it did show me what was possible. And I knew that if I just stuck it out, played the long game, that eventually the market would recover and I would make way more than I did in that previous bull run. If you have come into the market at a time that's not ideal, zoom out, look at the big picture, think long term, stay consistent and stick to your strategies. Because it doesn't really matter what asset class you're investing in, patience has always paid off. If you study some of the most successful investors in the world, you'll see that they all played the long game. I believe that the biggest reason people fail to think long term is because of mistake number 4 that crypto investors make, and that's that they don't understand the investment. They hear about these crazy returns that everyone's having, they start listening to their friends that know nothing, They do zero research and just jump in on any coin that they like the look of, and they're purely just gambling their money away. They don't understand the nature of the crypto market. They don't know how volatile it is, how it needs to mature still, how many projects out there are just worthless, and they're basing all their investment decisions on pure luck. One of the world's most successful investors, Warren Buffett, has cautioned investors to not invest in companies that you don't understand their business model. And the same is true for the crypto market. If you're investing in a project, you should know what that project's trying to achieve, how far along on their roadmap they are to achieving that, and how long that investment will take to play out. Being educated on all these things will only help you with the mistakes that we mentioned earlier. Understanding your investments can help you with that emotional investing, because you're not going to be worried when the prices drop, because you know that that's a good project, and you won't feel the need to time those buys, and you'll also give your investments time to play out long term. Understanding your investments will stop you from being emotional when the price drops, because you know that it's a solid project that you want to hold long term, and you're also not going to be worried about trying to time those buys as much, because you just want to get into the project, give it time to do its thing. Before we jump into some tips on how you can avoid these mistakes, make sure you subscribe to the channel and hit the notification bell. The first tip is figure out exactly what your investment goals are, whether that's paying off your mortgage or your debts, or trying to reach financial independence so that you don't have to go to your 9-to-5 job anymore, or just living a less stressful life financially. Get your goals written down so you know exactly what you want out of your investing, because this will also help keep you on track when things get tough, because you'll know what you're working towards. Tip number 2, having an investment strategy to stick to will remove all the guesswork out of your investing. This can help eliminate the emotional investing and the need for trying to time the market that we spoke about earlier. Far too many investors focus on the latest investment fad or trying to maximize their short-term investment returns instead of sticking to an investment strategy that has a much higher probability of helping them achieve their long-term investment goals. Now, tip number 3 is put in the effort and learn everything you can about the crypto market. Spend your time on Google, searching for how things work, looking up different projects, or search Twitter to stay up to date with all the news. Trust me when I say that the more research you do on crypto, the more confidence you'll have in your investments, and you'll be able to handle anything that gets thrown at you along the way. Now, if you haven't already, make sure you go and check out my previous video on what is cryptocurrency, and I'll see you over there.